Welcome to Trading Lounge and the US indices. We'll look at the SP500 in Elliott wave and the NASDAQ in Elliott wave. And starting on the daily chart here, we're looking at two counts here. This first one is a bearish count, and we're still within the correction of wave 3 as an A and a B and a C down for wave 4 here. So we're looking around the top here at the moment, and we'll look at that in some more detail in a moment. The bullish count, as you may know, is slightly different, of course. So in that we're looking at wave 3 over here, an A and a B and a C and a D and an E wave here for wave 4, and then up for 1 and back for 2 here, and then looking up for wave 3, 4 and 5 and moving up into that bullish market. So the easy way to work all this, really to work it out at the end of the day, is that the 2,800 here in terms of trading levels, the 2,800 is an important minor level, and if we have that as support, then we'll be going higher from that point. If not, well, then we'll be going lower. Support is really quite easy because when the market comes up here, it can do pretty much just a few things. It can either, well, let's have a look. It can just either keep going, or it can get to here and stop and fail completely, or it can do one of these patterns here, which will be, first one's an overshoot, where it overshoots, and the distance it overshoots here will be the distance that comes below here. And then it works itself in, and it finds that 2,800 being the closest largest number as a bit of a balance point, and then we'll push up from that point there. The other one here is, this one's not so, it happens a fair bit, but it's not as common as the next two. The next one is the classic trading levels pattern, where we have the arrival, the reaction here in 3 waves, and then we have 5 waves moving up above the level, runs out of steam, and then it corrects back down here in an ABC pattern like this. And then we just use one of these highs here to go long on one of these here, and if the market moves up through there, well, then we're long at that stage. The variation on this one here is much the same, where we have the arrival, the reaction in 3 waves, 5 waves up for the first high, and then we have an A and a B and a C wave that comes down and sits on this level here and then moves up here. It doesn't breach it, so one breaches it and one doesn't. So this is the most common pattern, then this one, and then this one here. Okay, so we're either going to get 1, 2, 3, 4, 5 of one of these patterns here. So well, knowing that makes it easy, doesn't it? I mean, we can start eliminating them one by one. So that's how we're going to handle the difference between being bullish or bearish. So just drilling in here on the, where should we start? Tick chart or 1 hour? I think we'll just start here. Okay, this is 1 hour. So our focus is the 2,800. We can count from here, wave 1 and 2 and 3 and 4 and 5. That's how we've been counting them to the upside there. Now, I also have a slightly variation on this particular count as well. So I'll just do it here actually. So we can look at wave 1 and 2 here, and then instead of going up for 3 here, then this changes a little bit. So we can put this, it may not occur, but we'll need a strategy for it anyway. And then this one over here will be an A wave here, a B wave here, and a C wave moving down here. So we'd be, if we're looking for a wave 4 here, then we'd be looking for 38.2% retracement level, which will come in roughly where the wave 4 of 1 lesser degree is. So if I just put this here, it's just an exercise that we need to go through. So we can move down to the 38.2% retracement level, all the way 4 of 1 lesser degree here. So if I can just move that over here, and in this space here, we normally just put that on that low there, and then find the 38.2% retracement level, then remove these lines here to clean it up a little bit. So that's essentially what can occur here and then move up from there. Now, I don't know if that's the case, but this particular pattern here, we've been tracking this on the 2-hour chart, and on the 2-hour chart here, this is what it looks like here. Slightly different, a different labeling because it's more of a bullish count, but wave 5 coming in here. I can just clean this up a little bit here, looking for that ABC correction. I haven't looked at this for a little while, and I'll just remove these. So even in this case, I still have this 5-wave structure to the downside here, and I know that that's the top. Just, what's the daisy? I know that's the top sitting on that point right here. It's all that's very clear from the cash market. But this move down here, let's just borrow these here and just change these to being corrective here. And I should have done this already, but sometimes it's good to see the chef in action, so to speak. So an A wave here, a B wave up here, and a C wave down at this point here, and this would be in 5 waves moving down through to here and then moving up here. So this is an alternative count, and I kind of like it really. So we'll just keep that in mind, and this this was our target sort of area from up into this space on the length of this particular structure here, but that's here nor there at this particular stage. But we'll now that we've updated that, so we need to keep that in mind there. But let's just go back to the hour chart now, and so I'm going to put this back here now, but we're mindful of what we're talking about here now. Okay, so we can have that top in play, and that ABC can be quite real here. So, but we'll get to that a little bit later. We'll be able to sort of figure that out on this move that comes down through here. So I'm just going to move these out of the way here for the time being, and I think we can look at just strategy here at the moment, because that goes right on there, So just move these out of the way here. Save that. So even you can see that that's a pretty clear 1, 2, 3, 4, 5 coming down through to here. One of the problems with this, even though it appears to be 5 waves down here, and I've counted on the tick chart, and we will look at it on the tick chart, but my problem is that this move up through here can also count as 5 waves up here as well. It's just a little bit tricky to count. So we do need to have strategy. If that's taken out, we need to go long, and you'll trade to the 28 and get out. But if that does trade up to there, then we'll need to look at that as wave 1 and back for wave 2 here, and wave 3 here, and wave 4 here, and wave 5 up into this space here. That's how that would count out. So I'll just put that there, so we've got a bit of an idea. Now I've got this down here, so this one's nice and tight in here, and we could also even bring that down a little bit further. We'll look at that on the tick chart. And this one here, as 5 waves down here and then breaching this one here, we can get closer to that. So I'll just put it up into, I'll put it close to the number 2 here. This is need to move that a little bit. Let's just get that. There we go. So if that level here, the 2772 here, becomes a retested resistance, then we need to be on the short side from that point, but we'll be able to get closer to that too. So these are our strategies. No matter what happens, we need to be long here and short here. We don't particularly, in trading, we don't want to be fixed on one side. We don't want to let our ego dictate to us in this. You know, the ego's not the boss, the market's the boss, and we need to go with that. So just moving into the tick chart here to have a look at this. So from the top here, I can see that we've got wave 1 here. When we had this wave 1 here, I knew that we'd get another 5 here. So we did have a trigger under here, and you may have been short, but obviously you would have either got back onto break even or gotten out at that particular point. So we've got this down here, but we do have this 5 waves down here from the top. So I mean, yeah, I can't see it any other way, and we're on 100 ticks here, and I put it into 20 ticks, and I've still counted down here, and it still counts as 5 waves. So technically we should, because we got 5 here, technically we should get, I can't draw on this side of the tick chart, we should get another 5 here. But what's bothering me about that is that this move up here appears to be in 5 waves as well here. So I'm left a little bit short. I've got this one down here as 5 waves, and then we've got this one here as 3, then I've got this one as 5. So, but even so, this can be, if I've got any other little guys in here, yep, we can borrow those. I mean, that can be a little A wave in here, little B wave in here, and a little C wave in here at this particular point. So it can be up for 1 here and back for 2 on this C wave here. So up for 1, an A and a B and a C, back for 2, and then up for 1, A and a B and a C for 2. So if that's the case, we can bring that down. It's a bit tricky. Anyway, we can bring it down onto this high here. Breaching that high there would be fine, but I'll just put it on top there. And that means that if that's the C wave here, that means that we can also grab one of these here and get that a little bit closer as well. Of course, getting closer to the market like this without not knowing the direction can be higher risk, but taking that C wave out there, that can be a short trade there as well. So the 27.80 as a retested resistance would trigger that. Because of this number here, I won't get into it, but the 72 means a lot. When we get a lot of 2s and a lot of 7s together like this, it could, in this case it's 2772, but it could have been 272, and a variety of things. But when you get those, it really plays a strong part, and I like to be on the right side of this particular level, so we need to be really on the long side here. If this was a retested resistance, then I'd be happier to be on the short side. So yeah, look, a little bit of a dilemma there that's coming out, and as you know, the spike up here was from the ECB, the diminishing their bond buying strategy. I'm just going to save that, but the reality for this here is that this, yeah, I'll just leave it at that time for the time being. Let's just look at the NASDAQ here. So for the NASDAQ here, we've got another little push up here to finish this here. So this will be 1, 2, 3, 4, probably 5 up into this space. I haven't really pulled that apart. I know I've got the 3rd wave in here. I don't know if we've got the 5th wave in here, but the 73 here would be the target for the upside here, no matter what happened at that stage there. The short trade at this stage would go here. Now, it's still a long way away. I understand that, but I need to see what happens. I need to see what happens here. If from the top here we get 5 waves down, coming down through here like this in the next session for whatever reasons, or it may even push up, then we'd still need to wait for the ABC correction, 5 waves down and ABC back up, and then we can put the line through here to short it if it moves down from that point. But we need to get that 5 waves here first, so we need to get a bit of confirmation. 73 is also really important, number 2. The 300 here, or the number 3, is part of group 1. So we've got 7,000, which is the closest largest number. Then we've got 1, 2, and 3. They make up group 1, and the next number up here, of course, is 7.5 here. So this is just the Fibonacci numbers as a price ratio. So 1, 2, 3, 5, and 8. And that's how we work our levels in most cases. There's a slight variation in some instances, but support on top of, you get a tested support on top of number 3 here, and that will take time as well. So the arrival, the reaction, and then the first high above the level, and then another correction here, and then support here. So that classic trading levels pattern again. If that occurs here, then we'll know that we'll be heading up to 7,500 at that point, because what I've noticed over the years is that if number 3 becomes the support, it's at this particular price point here that stops the pull of a large number, because large numbers, you know, even numbers, whole numbers, they're like magnets, you know, so that's what the trading levels do. They break up the whole numbering system into a grid and work out which is the strongest and the weakest, and every number's got its place. So I know that if this becomes tested support here, then what it's actually doing, people are forgetting about this number here, and they're thinking of the 500 and not the 300 or the 7,000 here. So they'll think of number 5 here, because 1 is the strongest number, then 5, and then 8, and then 3. So bit odd, but that's the trading levels. So a good support on 3 here will send the market to 5, and the reason for that is that anybody that was thinking of buying on a pullback here won't do that. They'll think that the market's getting away from them, and they'll want to jump on. You know how patterns work, and off they go. So yeah, let's just see how all this plays out, and we want to see how the European markets too, now that they've had the news from the ECB, unfolds over the next session. So Friday, how Friday closes is probably how Monday's going to follow through as well. So it's just logic, you know, as such. So alrighty, cheers.